So we're given the task to answer these following questions and discuss it. Let's start with number 1. Number 1. Discuss the advantages and disadvantages of the different legal forms of business organization and ownership. So, what are the 5 forms of business organization? So, first is partnership. Business partnerships can be general or limited, where general allowing both partners to invest in a business with full responsibility for any business debts, while limited partnerships require owners to file paperwork with the state and draft formal agreements. What are the advantages of partnership? First is easy to establish, where partnerships require less paperwork and legal documents to form than other business structures. Second is partner can combine expertise, where there are more opportunities to improve their collaboration skill set when there are more than one like-minded individual. And lastly, distributed workload, where people in partnerships frequently split responsibilities so that no one person is responsible for everything. So let's proceed to the disadvantages of partnership. First is possibility for disagreements, where partners may disagree on some aspects of the operation if more than one person is involved in business decisions. Second is difficulty in transferring ownership, where partners disagree and choose to stop their partnership. And lastly, full liability, where all members of a partnership are personally liable for business obligations and may face legal action. We're already done to the first business organization. Let's proceed to the second, which is corporation. Corporation is a legal entity distinct from its shareholders. Before delivering profits or dividends to stockholders, a corporation must pay its own taxes. What are the advantages of corporation? First is owners aren't responsible for business debts. In general, a corporation's debts are owed to its stockholders. Instead, stockholders put their money on the line. Second is tax exemptions. Health insurance premiums, wages, taxes, travel, equipment, and other expenses connected to company perks can all be deducted by corporations. And lastly, quick capital through stocks. Shareholders may sell their shares in the corporation to raise additional funds for the company. So let's proceed to the disadvantages of corporation. So first is double taxation for corporation. Before profits are distributed to shareholders, the corporation must pay corporate income tax, after which the shareholders must pay individual income tax. And lastly, the owners are less involved than managers. When there are multiple investors with no obvious majority interest, the management team, rather than the owners, may oversee business operations. We're already done to the second business organization. Let's proceed to the third one, which is sole proprietorship. Sole proprietorship. This popular form of business structure is the easiest to set up. So, what are the advantages of sole proprietorship? So, first is total control of the business. As the sole owner of your company, you have complete control over business decisions and spending habits. And lastly, low startup costs. The costs of running a sole proprietorship are much lower than those of other business structures. So let's proceed to the disadvantages of sole proprietorship. First is unlimited liability. Under this business structure, you are personally liable for all business debts and company actions. And lastly, difficulty in raising funds. When it comes to lending money, Investors typically prefer corporations because they know they have solid financial records and other forms of security. We're already done to the third business organization. Let's proceed to the fourth one, which is cooperative. Cooperative. These business owners collaborate to run the company and split profits and other perks. So, what are the advantages of cooperative? So, first is greater funding options. Depending on the type of cooperative, cooperatives have access to government sponsored grant programs such as the USDA Rural Development Program. And lastly, less disruption. Cooperatives allow members to join and leave the company without affecting or dissolving its structure. So let's proceed to the disadvantages of cooperative. First is raising capital. Larger investors may prefer to invest in other business structures that allow them to earn a larger share. And lastly, lack of accountability. Cooperatives have a more relaxed structure, so members who do not fully participate or contribute to the business disadvantage others and risk turning other members away. We're already done to the fourth business organization. Let's proceed to the fifth and last one, which is limited liability company or LLC. Limited liability company. This type of business is a hybrid of other types because it has characteristics of both a corporation and a partnership, making its structure more flexible. So, what are the advantages of limited liability company? First is limited liability. As the name implies, owners and managers have limited personal liability for business debts. And lastly is flexible management. LLCs lack a formal business structure, meaning that their owners are free to make choices regarding the operation of their businesses. So let's proceed to the disadvantages of limited liability company. First is associated costs. The startup costs for an LLC are higher than those for a sole proprietorship or partnership, and there are also annual fees to consider. And lastly is taxes. Owners may be required to pay their own unemployment benefits. So again, what are the five forms of business organization? First is partnership, second is corporation, third is sole proprietorship, fourth is cooperative, and lastly is limited liability company. We're already done with number 1. Let's proceed to number 2. Number 3. Explain the government regulation and procedures in starting a business organization. So here are several laws to consider when starting a business, no matter what type of operation you plan to run. So first is taxes. The IRS requires businesses to pay an assortment of federal taxes. However, there are few general taxes that all businesses owners can anticipate paying regardless of their business structure. First is income tax, second is self-employment tax, and lastly is employment tax. Next is labor. The Department of Labor enforces more than 180 federal laws regulating the labor landscape in the U.S. Here's an overview of the major mandates that are applicable to business owners. First is wages and hours. Second is workplace safety. Third is employee benefits. Fourth is family leave. And lastly is health insurance. Next is employment. Business owners must follow anti discrimination laws based on the number of employees they have. Here are few of the EEOC laws business owners may face. First is equal pay, second is anti-discrimination, third is accommodations, and fourth is anti-retaliation. Next is antitrust. Federal antitrust laws prohibit businesses from reducing competition in the marketplace. Federal antitrust laws ban the following businesses' behavior. First is conspiring to fix prices. Second is unfair or deceptive acts. And third is forming a monopoly. Next is advertising. The Federal Trade Commission enforces laws regulating advertising and marketing. Business owners must adhere to a number of requirements related to the following marketing aspects. First is health claims. Second is environmental advertising. Third is online advertising. And fourth is email marketing. Next is environmental regulations. The U.S. Environmental Protection Agency requires businesses to meet environmental standards based on the industry in which they operate. For example, automotive businesses may have to follow pollution and waste management regulations. Next is privacy. Companies must adhere to federal business regulations protecting the privacy of their customers. Here are a few examples of when business owners may need to take extra steps in the name of privacy. First is consumer privacy. Second is credit reporting. Third is employee privacy. And fourth is financial services. And lastly is licenses. Business owners may be required to maintain federal, state, or local small business licenses, permits, or certificates to remain legally compliant. We're already done with number 3. Let's proceed to number 4. Number 4. Discuss the nature of capitalization requirement for a project. The nature of capitalization. It allows an asset to be depreciated over its useful life and appear on the balance sheet rather than the income statement. We're already done with number 4. Let's proceed to number 5. Number 5. Cite the advantages and disadvantages of the different sources of financing. Businesses need to consider how they will fund their activities when starting up as well as their day-to-day operation. First is owner's capital. The advantages of owner's capital are quick and convenient, doesn't require borrowing money, and no interest payments to make. The disadvantages of owner's capital are the owner might not have enough savings or may need the cash for personal use, and once the money is gone, it's gone. Second is retained profits. The advantages of retained profits are quick and convenient, easy access to the money, no interest payments to make. And the disadvantage of retained profits is once the money is gone, it is not available. Third is selling assets. The advantages of selling assets are can create space for more profitable uses and raise money from unused equipment. And the disadvantage of selling assets might need the assets in the future. Fourth is family and friends. The advantages of family and friends are low interest, money may not need to be paid back. The disadvantages of family and friends are money may be lost if the business fails, and arguments may occur between family members. And lastly, the new partners. The advantages of new partners are potential to raise huge amount of money, and they may offer advice and help. And the disadvantages of new partner, our owner must give away part of the business, and they may have a different vision for the business than the owner does.